My name is Margot McAuliffe, and I'm the founder and CEO of GABY. GABY is a consolidator of retail dispensaries focused on the California market. I started my professional career as a lawyer in Vancouver, Canada. I then got recruited to join a telecommunications company where I helped grow revenue from $200 million to $2 billion. After leaving that company, I started my own merchant banking business where I did 3 retail consolidations, and I'll talk a little bit more about that in the presentation. I won't talk about the disclaimer. You've all seen it. You know what it's about. If anybody wants a copy, you can get it off of our website. So as I mentioned, GABY is a consolidator of retail dispensaries focused on the California market. Let me start by giving you some highlights and talking about what I'm going to speak on this morning. Mankind is our flagship dispensary. It was recently named San Diego's favorite dispensary. It does revenue of $25 million a year. It will form the foundation of our consolidation strategy. What I mean by that is we have a spoke and hub strategy, and Mankind will be the hub and will grow from there. We were recently named to Inc. magazine's list of top 5,000 fastest growing companies in North America. Last year we launched a proprietary brand called Kind Republic, and we now have flower, pre-rolls, concentrates, and soon to be vapes under that brand. We did almost $2 million in flower sales alone last year with no advertising, just word of mouth, and all from our own retail dispensary. We also have margins of an average of 70% with that brand. Our strategy is to build our proprietary brand within our own dispensaries, and as we grow dispensaries, we'll grow our brand. Although we have started to sell in third-party dispensaries. GABY is women-founded. It was founded by myself and my sister, and over 50% of our management are women or represent minorities, which is important to ensure a well-rounded and strong leadership team, but also because ESG, which stands for Environmental, Sustainability, and Governance, is becoming more important in investment decisions. And I'll tell you more about our leadership team further in the presentation. I'll also share with you the GABY impact. The GABY team is focused on execution, and later in the presentation I'll get into details of what we've accomplished since taking over the Mankind dispensary last year. And finally, we're listed on the CSC and the OTCQB under the trading symbol GABY and GABLF. Let's start by talking about Mankind, our flagship dispensary, and as I said, the foundation of our consolidation strategy. We acquired Mankind in April of 2021. We have one of the highest grossing dispensaries in California and 3 channels from which consumers can shop: in-store, delivery, and curbside. Our business is split 60-40, 60% in-store and 40% in delivery and curbside. We serve 27,000 customers per month, and that's about 5% of the San Diego population. Last year we served 36,000 new customers, and we had our best day yesterday ever at 125,000. We have an award-winning dispensary. You can see by our high ratings that our customers love us. Our goal is to normalize cannabis consumption, and we have a self-serve model which allows customers to interact with the product directly, which is different than other dispensaries. We're focused on both traditional and mainstream consumers, which is important because traditional consumers are the bread and butter today, but mainstream will be the future. Quick financial snapshot. Our unaudited preliminary numbers show that for 2021 we'll finish the year at $32 million in revenue, and we realized EBITDA of almost $1.3 million. You'll notice that Q2 increased significantly over Q1, and that's because we closed the Mankind acquisition in Q2. You'll also notice that our revenue decreased quarter over quarter, but our gross profit stayed relatively flat, and our gross profit margin increased. And that's because we closed down our low-margin distribution and wholesale business in Q3. As I mentioned, we're California-focused. Let me tell you why. California is the largest cannabis market in the world. It's expected to reach $5.6 billion this year, growing to $7.2 billion by 2024. It's also the fifth largest economy in the world, and it's a tastemaker market, which means that what happens in California matters to the rest of the world. And it's a market that eventually everyone needs to enter, so we see ourselves as a strong takeout target. But even if we don't sell, we're growing a sustainable business for the long term. California poses a unique opportunity. It's a market desperate for consolidation. There's 850 small and independent locations serving a population of 36 million, which is 2 dispensaries for every 100,000 people. Compare that to Oregon, which is 17 dispensaries for every 100,000 people, or Washington, which is 10. There's no household names. No one owns more than 4% of the $5.6 billion market. It's an industry plagued by inconsistencies due to being dominated by inexperienced operators, where they have chronic out of stocks, they have insufficient capital to grow or sometimes even maintain inventory levels. And there's no consistency in product offering and therefore no consumer loyalty. Many of these dispensaries are for sale. They've hit hard times during COVID and were unable to pivot. Some want to stay in the business but don't want to operate, which gives us an opportunity to use our shares as currency and let them grow alongside us. Some want to remain in the industry but need help, and that allows us to franchise. Only 20% of municipalities in California allow cannabis retail, but new markets are coming on stream, and that allows us an opportunity to apply for new licenses. Today there are only a quarter of the number of dispensaries which existed before legalization, and 2/3 of all sales in the cannabis industry in California go into the illicit market, so the legal market serves as a good market replacement for the illicit market as people move into the legal market. We've talked about consolidation. We've talked about how Mankind is the right foundation for dispensary consolidation. We've talked about how California is the right opportunity. Let's talk about the team. As I mentioned, after I left law, I joined a telecommunications company known as Shaw, and I helped grow revenue to $2 billion. I then started Vista Radio, where we grew from 0 to 50 locations, and I grew EBITDA by 500%, oftentimes within the first 18 months of acquisition. I then sold Vista Radio to a private equity firm and moved to the Domino's brand, where I grew revenue by 24% year over year to $250 million. I then sold that interest to my business partner and moved to the Subway franchise, where we grew locations to 840 and grew revenue to $450 million and returned 760% ROI to our investors. Let me introduce you to Simon Lalikas. He's our president. Simon worked with me as the president of Subway for 5 years before taking over the presidency of GABY. He has lots of experience running retail operations where he consistently grew revenue and returns to shareholders. He has lots of experience building out locations. He started with Starbucks and was responsible for building out 200 locations in new and emerging markets. Paul Stacey is our CFO. He has experience in both COO and CFO roles. He has big company experience with Nabisco and other large companies. He partnered with private equity to build out their startup investments, so he's also got startup experience, and he started his career with PwC. John Butters is our Chief Marketing Officer. He's an entrepreneur in his own right. He brings a data analytics approach to marketing, and in his first 10 months after joining Mankind, grew revenue by 41%. Our board has relevant and diverse experience. I won't go through each one of them, but let me just summarize that we have big company experience, entrepreneurial experience, cannabis experience, retail experience, e-commerce experience, HR experience, and finance experience. So a very well-rounded board. Let me talk about the GABY impact and what a good management team can do if given the opportunity. In 9 months since taking over Mankind last April, we've launched a proprietary brand, which I talked about, with 70% margins. It's our highest seller in our store. And as I said, we did almost $2 million in sales. We cut costs of almost $4 million, primarily from SG&A. We restructured the delivery business and grew it by 20%. Our target is 50% growth in 2022. We strategically remerchandised to influence consumer spending and grew average ticket by $2. And we implemented a data-driven marketing strategy which increased our interactions with our consumers by sending them messages that are relevant to them and of interest to them. A little bit about our ESG strategy. In terms of the environmental side, we've implemented policies to reduce waste. We've committed our Kind Republic brand to biodegradable packaging, and we've amplified the voices of charities which promote sustainability. On the social side, we've partnered with charities that are meaningful to our customers and our community, including charities focused on women in need, military veterans, and the Last Prisoner Project, which is aimed at freeing people convicted of victimless, nonviolent cannabis crimes. On the governance side, we're focused on diversity, equality, and inclusion. We're proud that 60% of our board and 50% of our managers are women or people from minorities. A little bit about the GABY ecosystem. We have 3 licenses: manufacturing, distribution, and retail. Manufacturing and distribution really exists to serve our retail operation. And our goal is to focus on getting products off shelf and in customers' hands. A quick look at our cap table at 2.5 cents, which is where we were trading on April 7th when we put the deck together. We have a market cap of $18 million Canadian. Our enterprise value is $53 million, including our debt. The majority of our debt is held by the vendors of the Mankind dispensary, and it's very favorable terms with a 7-year payback. Looking at our comparables of our peers, there's a lot of typing on this slide, so let me just summarize for you. Looking at 2022 estimated enterprise value to sales, senior cap companies trade at an average of 3.3 times. Mid-cap companies trade at an average of 2.2 times, and GABY trades at an average of 1.4 times. Lots of opportunity for growth. Looking at estimated enterprise value for 2022, enterprise value to EBITDA, senior cap companies trade at 11.1 times, mid-cap companies trade at 49 times, and if we remove the outlier Goodness Growth, which is trading at 160 times, we still have a multiple of a whopping 28 times. GABY trades at 6 times. So again, lots of opportunity for revaluation and growth. There's 3 things that impact our share price: execution, awareness, and market sentiment. I've shown you that we're executing. My job full-time these days is to build awareness in our company and in our brand. And market sentiment, cannabis is out of favor right now, but everybody knows that you want to buy as a contrarian, so now's the time to get into the market. In conclusion, GABY's primed for growth. We have unparalleled dispensary revenue of $25 million, which creates a good foundation for consolidation. We are retail expansion gurus with one of the best management teams in cannabis. We're experienced in operations, in consolidation, and in implementing growth. We have a single goal: it's California dominance. California offers a unique opportunity, and we're looking to take advantage of that. We have an undervalued share price. GABY accounts for 5% of the total cannabis sales in California, and yet our shares are highly undervalued. We have the right foundation, the right opportunity, the right team. GABY is definitely primed for growth. And for a detailed version of our deck, you can go to our website and download it. Happy to answer any questions. Joe?
So, thank you for the presentation. You talked about consolidator. Maybe you could expand on that. Are you looking in any place in California at a specific model of how you want to do your acquisitions, and what is the acquisition landscape right now in California?
So the acquisition landscape is favorable to buyers right now. There's a lot of dispensaries that are for sale. The average dispensary trades at about 1 to 1.3 times. As I mentioned, there's a lot of fragmentation in the market, so there's a lot of opportunity for consolidation. We're looking to grow firstly in SoCal because that's where our Mankind dispensary is located in San Diego. And it just makes sense, and it's easier for management to manage locations that are geographically adjacent. If we found a hub in NorCal, we would, of course, acquire it and then continue our hub and spoke strategy in NorCal.
Yeah, you made a point about how you restructured services. Can you elaborate?
On the delivery side?
Yeah.
We started running it as a real business, so we pivoted into delivery during COVID, and it was really thought of as an adjunct to the retail store. So now we look at it as a distinct business on its own. We maintain hours from 9 a.m. to 10 p.m. We've expanded the fleet, and we've expanded our drivers. We've also cross-trained our retail store staff so that if a driver calls out sick, we can fill in the gap. We're focused on retail dispensaries. Our licenses in distribution and manufacturing really serve our retail.
So do you have any brands that you have in-house?
Yes, we have a brand called Kind Republic, and it's a flower brand, and soon to be vapes, concentrates, and pre-rolls. And we did almost $2 million in sales in that brand last year on just the flower alone, and we sell that out of our own dispensary. We just moved into other dispensaries, but it's not our primary focus. Our primary focus is to grow our proprietary brands through our own dispensaries. Any other questions?
Are you based in Canada or are you actually based in San Diego?
So me personally?
Yeah.
I'm personally based in California. I do go back and forth to Canada because I have a brand new grandson, so it takes me back to Canada occasionally.
And where are you at in California?
I live in Palo Alto, and I commute to San Diego on a regular basis. I'm not involved in day-to-day. As I said, my primary focus is building awareness in the brand, and I've got a president and a management team that's focused on the San Diego operation.
I'm in Los Angeles, so yeah.
Well, come and visit us.
Yeah, please, yeah.
Any other questions? If there aren't any questions, at 2:30 I'm at table 1 in the breakout room if you want to come and have a visit. Thank you.